hopefully, if I start talking about cattle prices, everyone will start filtering back into the room, and I'll put out some crazy number on what cattle prices could do, but I'll save that to the end to get people to sit and wait. I'm going to talk about a bear and a bull market. It's been a phenomenal couple of years for the Australian cattle industry across the board, but now we're faced with a number of headwinds, a number of challenges, slowing economies around the world. The question is, what's the next couple of years going to actually look like for the Australian cattle industry? As I said, we sort of got through 2020, 2021, 2022, beginning of 2022 was shaping up to be a great year. We were pushing aside the COVID, the masks, the disruptions that we were seeing. We were starting to move into this phase where we could go out again. We could see our friends. We could go out and have dinner. We could get a plane. I must admit the first plane I caught for a while earlier this year was a bit of a novelty. I had to remember what I needed to pack in the suitcase, what I shouldn't have packed in the suitcase when security stopped me and went through everything. I also read, in terms of talking about getting on a plane, travel and tourism, and particularly in some of our markets that we're looking at from a live export point of view for Indonesia, for example, I looked up the tourism numbers for Indonesia the other day. They were getting about 14 million tourists to Indonesia in 2019. That dropped to 1.4 million last year. Obviously a massive impact on the economy. It is encouraging, though, that we're starting to see those numbers pick up again. 500,000 tourists in September is the highest volume of tourists into Indonesia since January or February 2020. So good to see a bit of a recovery there. Hopefully that'll flow through into that Indonesian economy. Also, from an Australian point of view, we've had some phenomenal seasonal conditions, particularly on the east coast. Very limited cattle supply, very strong producer demand as they're starting to rebuild their numbers. And also going on in the background, we've got some very strong global markets. If you look at our key box beef destinations, Japan, South Korea, US, the import prices for Australian product going into those markets at the beginning of this year were some of the highest prices we've seen historically. So very favourable conditions from an Australian cattle point of view. When we talk about cattle prices, we all know Australian cattle prices have been very high. I was reminded yesterday, talking to someone, that this is a slightly different audience to what I'm used to. Usually I'm standing up here talking to producers, in which case high cattle prices is a good thing. Obviously the number of live exporters in the audience are probably concerned about high cattle prices, but yes, Australian cattle prices have been very high. But we're not the only country that's seen high cattle prices. I think between about the end of 2019 and the beginning of this year, Australian cattle prices effectively doubled, but Brazilian cattle prices increased by about 60%, 66% over that same period. Argentinian cattle prices increased by about 70%. And even in the US, where they've got some record production and a massive cow liquidation, which I'm going to talk about in a minute, their cattle prices have gone up by 12% in that same period. So we're not the only country experiencing very high cattle prices. These are in local currency terms. If you put it into US dollar terms as a comparison to show how we rank in global cattle prices, yes, Australian cattle prices were some of the highest through 2020, 2021. We've now started to come back down. Australian cattle market has eased a little bit, but it's probably more the currency effect that's showing this. And we've dropped back to second behind the US again. We'll probably see that balance out over the next couple of years as Australian cattle prices, I expect, to continue to ease off. So very high cattle prices, and then came along our friend in Russia, Ukraine. And Greg Sheridan did a great job yesterday talking about some of the geopolitical tensions in the world and what's going on in that Russia-Ukraine market, how that's having an impact on global trade. He was talking a lot about, military action in different countries. I'm really interested as to what sort of trade implications it has in different economies and different markets, and we'll get to that at the end as well. But the Russia-Ukraine situation has had a global impact. When we start breaking it down into some of the key areas that they influence, we look at fuel and oil prices, gas prices. The Russia-Ukraine area accounts for about 26% of global gas exports. It accounts for about 12% of global oil exports. When you have disruption like we saw in that Russia-Ukraine crisis and the uncertainty about supplies coming out, it obviously has a price implication. We saw gas prices rise, we've seen oil prices jump to over $120 a barrel. They have started to come back down now. I think oil prices are trading around the $95 to $100 a barrel. We're expecting them to continue at that price for the rest of the year. but the uncertainty in that market is definitely having implications across the board from a cost point of view. Talking gas prices, not only are they big suppliers of gas, and gas represents about 80 to 90% of the cost base for urea, but they're also big exporters of fertiliser, urea, potash, those fertilisers. And as a result of higher gas prices, but also the fact that they account for about, I think it's 26% of ammonium exports, about 17% of global urea exports, limited supplies out of those markets also sent fertiliser prices higher. And while I don't suspect a lot of people in the audience here are big into cropping, and therefore urea prices have a big influence on their cost basis, it does start to flow through into the cost of feed. And looking at cost of feed and adding to that what happens from a grain point of view, the Russia-Ukraine area, again, big suppliers to the global grain market. About 30% of global wheat exports come out of that Russian-Ukraine area. I think it's about 17%, 19% of global corn exports, and about 30% of global barley exports come out of that area as well. So again, the disruption in that market, the contraction in, or the expected contraction in supply led to a huge spike in prices, in grain prices. As I said, now from a grain point of view, it's probably not a big influence on an Australian extensive live cattle market or a live Australian cattle industry, but it does have an influence on those feedlots that are buying cattle. It does have an influence on our US competitors that are out there doing a lot of feeding of cattle. It does have an influence on our poultry and pork competitors on that supermarket shelf. And we've seen our feed index that we calculate based on global feed prices jumped by about 26% between the end of last year and April this year. Those feed costs are now starting to feed themselves through that supply chain. We saw in Australia, Australian retail prices for chicken between Q4 last year and Q3 this year have jumped more than 10% retail prices. If you listen to the Ingham's AGM or investor calls, it's all about how they're trying to renegotiate their contracts with retailers to be able to accommodate some of these cost increases in their supply chain. So retail poultry prices increased by over 10% in that period. Beef prices increased by less than 9%. So they're starting to claw back some of that margin that's been created over the last couple of years. When the consumer goes into that shop and he sees the beef price that's been rising for the last 2 years, the chicken price is now starting to come up. They haven't completely eroded the gain that was had there, but it's starting to bring it back into perspective, and that's having an influence. We are hearing things like, the cost of grain in the US for the feed yard operators over there, corn up around $9 a bushel, which is very high, obviously affecting their cost of gain and affecting their end cost of production as well. Inflationary impacts are flowing through the whole system. We're seeing inflation around the world now starting to be very strong. I can't remember the numbers off the top of my head. US is over 8% inflation, Australia is over 7% now. Meat and beef within that has been part of that increased price. Particularly interesting when you look at some of those developing countries and how exposed they are to these increasing food costs. From an Australian point of view, by my calculations, food represents about 10% of your household domestic expenditure. In Indonesia, I've seen reports, it represents about 50% of your household domestic expenditure. So when your food prices go up, it has a much bigger impact on your overall budget. And if there are contracting real incomes in the world and you're having to make decisions about what you've got to start reducing your income, reducing your expenditure on, obviously food starts to come into consideration there, and we're starting to see things flow through. This is a breakdown of the Indonesian CPI index. You can see the big bars in the orange on the bottom. That's the food component of inflation in Indonesia, and you can see through the course of last year, early in the first half of this year, how much that increased food cost has pushed Indonesian inflation up. It's leveled off a little bit more recently, but still it's been a big contributor to that Indonesian inflation complex. Increasing costs, higher prices around the world, we're starting to see with the disruption that's going on, geopolitical tensions, etc., everyone's starting to wind back their expectations for global economic growth. These are the forecasts from our global economics team over in Utrecht. The grey bars there show what the global economic growth was for these key regions in 2020 when COVID hit. The green bars were the recovery from COVID through 2021. Now these are what we're looking at for 2022. And I've got 3 different bars there based on the different times of the year when they've actually made these forecasts. And you can see generally, as we've progressed through the year and the Russia-Ukraine situation's unfolded and economic situations have developed, gradually they've been bringing those economic growth forecasts back down. And then what we're looking at for next year again is even slower growth. In Australia, our team's expecting about a 0.4% GDP growth, the same in the US. Even China, that stands out on that graph there, is showing very strong growth. I think it's around 4.2% on this graph. Historically, that is a low number. They've been used to 6, 7, 8% growth. So even in China, they're seeing a much slower growth. Slower economic growth, all the news in the media is having an impact on consumer sentiment. Consumers are becoming worried. You can see the big drop here in consumer sentiment across all those major economies as the consumers just really start to get a little bit concerned about how the future's going to unfold, what it's going to mean for their income levels, what it's going to mean in terms of their ability to actually afford their way of life. The big one on this graph here is the light blue. That's China. And obviously the zero COVID policy that we've seen throughout this year has had a big impact on that consumer sentiment in China, a big decline in consumer sentiment in China. There is sort of a little bit of an uptick. The optimists in the room will see that some of those are starting to pick up again, which is encouraging. Really at the moment we're probably at a position where it's a bit of a wait and see to see how some of these central banks can get onto the inflationary problem, manage inflation without pushing economies into recession and slowing everything down. It's a real fine line in terms of the balancing act. But it's probably fair to say that the wind has come out of the sails in the market. Things are going to start to slow down. We're starting to see that impact at the retail level as those consumer perceptions are easing off, the economic growth is coming back down, real incomes are starting to come under pressure. I've got here the Yum food business that operate the Pizza Hut and KFC lines. This is their China business, same-store sales. You can see through the first half of this year, their same-store sales in China have been negative growth. The volumes of sales that Yum is doing into China is declining. Understandably, with their zero lockdown or zero COVID policy lockdown, going out to eat is probably pretty difficult when you're stuck at home. So we're starting to see this flow through. As I mentioned before, we're seeing it here domestically within our retailers. This is a quote from the CEO of Woolworths talking about how those cost-conscious consumers are now walking into the supermarket with a budget in mind. They're not walking in there going, oh, I'd like to have this for dinner, I'm going to pick this up and I'm not too concerned about how much it is, but they're going in with a budget in mind and shopping to that. And as a result, his comments were, they're starting to see people trade out of beef, trade out of meat, into frozen vegetables, out of fresh fruit and vegetables. They're looking for the cheaper options on the shelf. Now, beef, I think, is lucky in this situation. There is a massive spectrum of product at different price points for that consumer when they walk into the supermarket. They can buy their budget mince on one hand, or they can go for their 5-score, 7-score marbled Wagyu steak at the other end if you happen to shop in an area that sells it. So there are a lot of options. And from a processor point of view, your ability to sort of shift product up and down the chain, up and down that pricing point into those different markets might save beef, I think, a little bit more than, say, for example, lamb, which has positioned itself as a very premium product into a more niche market. So things like quick service chains, hamburgers, which is great because the US loves them. These are the same-store sales for McDonald's, the global McDonald's. So in comparison to the Yum numbers that were up there before, you can see McDonald's same-store sales, up until Q2 anyway, this year, were showing relative steadiness. They weren't seeing the same decline. So that consumer still wants to go out, they still want to eat something, they're just going to choose a cheaper way of doing it. And I think beef's got more to offer in that situation. But the question remains me, well, what does slowing economic conditions actually do? What impact does it have on beef prices? I have to excuse myself for the mess that's going to end up on the slide up here, but I'll try and talk through it. What I've done is I've plotted economic growth for key countries that Australia sends product to, and I apologise, I haven't got the Indonesians and the Vietnams up here. I've just picked Japan, South Korea, and the US as three key markets we send a lot of product to. These are economic growth for those countries at that point in time. To make it a little bit clearer, I've highlighted these 3 points. So the Asian financial crisis, the global financial crisis, and COVID as 3 periods when we saw slower economic growth in those key markets. To understand how that's influenced prices, I've then run import prices for Australian product into those markets. So this is Japanese imported Australian brisket and trimmings. We've got Korean imported chuck roll, and we've got US imported lean trimmings, and then the green line's an Australian cattle price. As I said, it gets messy, but I can't actually see any concrete relationship there between economic growth and global meat prices. There are bigger things that have had an impact on global meat prices than economic growth. So I think focusing on economic growth is probably not going to guide us as to what's going to happen to cattle markets and cattle prices. What we need to be looking at is something below that. We need to look at cattle prices themselves, and we need to look at household income. That has a much stronger correlation to household consumption of beef. And just looking at Australian numbers, beef prices are up around about, I think it's an 85% correlation to per capita consumption, and income's about an 87% correlation to per capita consumption. I'd argue that we've probably seen the impact of higher prices flow through, and I think the consumer has been able to weather that. The general economic conditions have allowed them to accommodate those prices. I think the real thing for the Australian market is understanding who the consumers are in our key markets and what the impact of incomes are going to be on our demand, on their demand for Australian beef. So that's one thing to keep an eye on. But let's have a look at the road ahead, what's going to happen and what's on the horizon. Now, I've picked 4 key things here that I think are potentially going to have a very big impact on the Australian cattle market, influencing the availability of supply and our prices. First of all, the US. The US at the moment is undergoing or is experiencing a drought, a very dry condition. It is interesting being part of a global team, constantly being asked about how dry it is in Australia and having to tell them on the phone calls that we have late at night that no, actually large parts of Australia are in flood at the moment. But the US, unfortunately, is in the middle of a drought. A La Nina in Australia means good wet conditions, but it means a drought in the US. We estimate around 60+% of the US cattle herd is in a drought-affected area. As a result, we're seeing massive cow liquidation from that US cattle herd. They had an increase in cow slaughter last year of 9% on the year before. Up until, I think, at about September, October, they were tracking at about 14% higher than last year again. So continuing to tip out cows. When we start comparing to what's happened in the past, we go back to 2011 and 12 when we saw those same sort of numbers. Back in 2011 and 12, the seasons changed, they started to recover, the cow slaughter started to come back down. They had a shortage of beef production there, and as a result, when you look at prices peaked, they spiked. The US import price for Australian product in that 2013-14 period jumped something like, I think it was something like 60% in the space of about 4 months as a result of the limited supply in the US. And those in the room that have been around, and it wasn't that long ago, we all remember 2014 here wasn't exactly a great season. We were pushing out record volumes of cattle. So despite record volumes of cattle going onto the market, the US demand for beef lifted that global price. The question is, where they are at the moment, do we find ourselves potentially, most likely in 2024, the US going through a same rebuild phase, shortage in volume of beef, potentially pushing global beef prices up 50% higher than where they are at the moment? Could we be talking about a US import price for Australian beef at $4 US a pound? Not too long ago, it was $3, $2.80 was a good price. Could it get that far? That's a question for the US consumer, effectively. They've always bought beef. Will they be willing to pay for it? So that's one thing. The other thing is what's going on in India. Now, I must admit, our coverage in India is not great these days. We had a few analysts there that I could draw on to get some snippets of information, but it's not been great of late. But I'm subscribed to a number of newsletters and newspaper articles come through, and I can't help but think the articles that I'm starting to see in the last couple of months about lumpy skin disease and the impact it's having on their cattle numbers over there. I mean, who knows how many cattle are in Indonesia and how many buffalo are there, but the fact that they're reporting it in papers, it must be something that's having an impact. I wonder, could we possibly see that Indian buffalo cow herd contract as a result of impact of exotic disease over there? We aren't seeing it at the moment. In fact, Indian buffalo exports are up 10% we're up to August. For the first 8 months of this year, they're up 10% on last year. Exports to Indonesia and Vietnam are up around the 39–40% on last year. So increasing volumes coming out of India at the moment. I think the numbers I calculated for Indian buffalo going to Indonesia at the moment is about 90,000 tonnes for the first 8 months of this year. We're also seeing in their per unit prices lower than what they were last year. In fact, lower than what they've been in the last 5 years. So increasing volumes at lower costs. It's obviously going to have an impact on the competitiveness of Australian product or Australian cattle going into those markets and into feedlots over there, and how that compares in the wet markets against that Indian product. But the question remains, are they actually reducing the volume of cattle in that market at the moment? So potentially in a year or two's time, we might see those volumes contract. The other thing to throw over the top of that is where China sits in the whole grey trade. The other thing, and the third one I wanted to point out, is very much a domestic focused thing, the rebuild of the Australian cattle herd. I think there have been some fundamental shifts a little bit in the Australian cattle herd. We have now seen effectively 3 years of good seasons for much of the East Coast, and yet we continue to see very low numbers come through our slaughterhouses, our abattoirs, and we continue to see very strong prices, suggesting that producers are continuing to buy cattle, and they want to buy cattle, or they're willing to hold on to cattle. They're not pushed or forced to actually sell them off. So these are our East Coast weekly slaughter numbers. You can see here the light blue is the 10-year range between the highs and the lows. Dark blue line is what we did last year. The orange line is where we are at the moment. We're 9% behind last year. And that doesn't quite add up in my head. In the fact that we've had 3 good seasons, why aren't we starting to see numbers pick up? So we've either changed and we're now doing more trading of cattle and people just haven't built up their breeder numbers and they aren't starting to flow through, or there are numbers that are being held on farm at the moment because people aren't forced to sell them. Prices are good, they don't have to sell as many, and the seasonal conditions are great. So they're not being forced to offload them. And as a result, are we seeing a build-up in stocks? What could that mean if the season suddenly goes dry? Is everyone going to try and tip them out in a hurry, and are we going to see a big contraction in prices? I don't think that's the case. I feel that we've been more the case that it's been a bit of a shift to a trading mentality for a number of people. They just haven't built the breeding numbers up, and it means that we're going to be a much slower recovery in the cow herd. That then in turn raises questions to what happens when the US decides that they need a whole lot more beef. Back in 2014, we supplied as much as we could, record volumes. We reached our US quota. If we don't have the cattle, what's it going to do for that global import, that global beef price for the US, and are they going to go and find it somewhere else? Will Brazil fill that gap? Will we lose our trade into the US? And the last one I wanted to touch on was the geopolitical situation. Greg mentioned it yesterday. As I said, he talked a lot about some of the military aspects to things. I'm intrigued about what happens with trade. We believe that trade has become a tool in these geopolitical tensions around the world at the moment. You're all probably well aware in terms of the abattoirs that lost their export license to China. I heard recently speaking to our US colleague that he's hearing rumours or discussions amongst the industry over there that there are a few questions being asked about by China on what's going on in terms of their ractopamine over there. Does China use trade as a weapon, effectively, in some of these geopolitical tensions, and how exposed are we to that? Or how exposed are others to that? Brazil's sending half of their exports, I think it's more like 60% of their exports to China at the moment. If China was for some reason to decide that they didn't want Brazil to supply beef to them anymore, where does that go? What other market does that go into? What does that mean for global prices? It could have a huge impact on global trade, depending on how it all pans out. And obviously those that are watching what's going on in the US midterms at the moment, we could just be adding fuel to the fire in terms of a change in political regime in the US, and it might all come to the fore again in a couple of years' time. So there are 4 things I think that will potentially have an impact on the market. I probably haven't provided a lot of guidance as to which way we think they're going to go, because there is just too much uncertainty with some of these things, honestly. I'm not going to predict whether or not Xi Jinping's going to decide to do something about South China Sea next week or not, but it's something just to keep in the back of your mind, understand where we sit, what might be having an influence on the markets, and how it might impact your local market here. Quick plug for our podcast channel. If you want to, feel free to listen to any of the podcasts on there. We cover a whole range of things, but otherwise, thank you very much for giving me the time this morning. I hope you have a good rest of conference, and hopefully I'll be around for a couple of hours if anyone's got any questions at the end.
So, questions, please. Hand, oh no, it's not a hand. Scratching a head. How are we going? Front row. Where are we? Okay, sorry, over there.
Angus, Tom Breen from Nutrien. Fantastic presentation as usual. Thanks for the insights. 2 questions. Where does the growth for China come from? So particularly the Western world, where they're used to being a factory for us, growth outlook, high inflation is going to be pretty persistent through to next year. So where does that growth for China actually come from? Recognising that 4% is a lot lower than what it has been, but it's still pretty solid growth for the rest of the world. And what's your view on inflation over the next 12 to 18 months? Is it systemic, or do you think it's transitory?
Good questions, and there are probably better people than me to answer both of those. Growth in China has been funded a lot by the government there and the drive there to actually build and progress things. It's not my area, so I'm not going to comment on whether or not the future of that growth can continue. Obviously, our economics team forecasts are that it's going to ease and slow. I mean, throw into that potential, separation of powers and trading sanctions and things like that. Who knows what might actually happen to it? But I think my own personal view is we probably can't view China as that super powerhouse of that global growth and expansion that it's been over the last couple of years. Looking forward into the next couple. It's still going to be a very big player. It's the biggest importer of beef in the world. It still has an impact, and it generates a whole lot of products and a whole lot of demand, but it's probably just not going to see the same amount of drive that it's actually created in the market. From an inflation point of view, again, there are better people than me to actually answer the question. But inflation, the way they report inflation, 7.1% increase, it's a year-on-year growth. As I showed up there, Australian cattle prices have peaked. They're starting to come down. A lot of the cost pressures that we've seen come through the system, all those peaks with gas prices, energy prices in Australia are possibly going to keep going up, but freight prices, for example, they went through the roof with COVID and disruption. They're now starting to come back down again. Some of those cost pressures in the system are easing off. When you're looking at it from a pure mathematical point of view, a year-on-year comparison, we can't keep going at the same rate. It will plateau. It will come back naturally. Our economics team are actually, a lot of the discussion there is, well, inflation just happens. It ticks along. The ability to influence it is quite limited. So the movement of central banks really comes into play around, things like the cost of funds and exchange rates and financial movement of money in global markets, and the movement of the Australian central bank here to increase interest rates is possibly having limited impact on inflation, but it's positioning us in terms of that global money market and where we sit and exchange rates, which in turn affect the cost of imported goods. So yeah, my belief, and again, this is only mine, but I think we'll naturally see those numbers come back, but there are still costs in the system that will keep it higher than what we've seen in previous years for a little while yet anyway.
Got a question in the front here.
There might be a lot of people in this room might already know the answer to this, Angus, but have you ever looked at what impact the closure of live cattle exports to Indonesia would have on their food prices?
On Indonesian food prices? Yeah, that's a good question, and no, I don't have the actual answer to that, but yeah, obviously it's a large component of their supply of meat into that market. Possibly now that we're starting to see Indian buffalo go in there, there might be an ability to overcome a shortage that they would have if live exports was to cease. But yes, you'd have to imagine it would have definitely some inflationary impact because of a shortage of supply in that market, but no, sorry, that's probably as far as I'll go without getting myself into too much deep water on what the actual impacts would be for that market.
Question over there, Angus.
Hi Angus, thanks for the presentation. Kendall Crocker from the Department of Agriculture. I noticed you included Brazil in your figures because they're a big player in the world market for beef, and they've expanded their beef production in recent years under Bolsonaro government, largely at the expense of the Amazon rainforest. Now that they've had a change of government, is that something, do you see that as possibly impacting the continued expansion of the Brazilian beef market, or do you think we'll see it moderate?
How do I answer this? Probably no. I think a bigger impact on the Brazilian production complex is going to be the price of cattle and their move from a generally extensive grazing situation, tapping into some of the feed that they've got there and the ability to leverage that in a more intensive agricultural sort of feeding regime. I think that's where they will potentially get a lot more growth in production rather than necessarily expanding new areas that they're going to grow cattle in. So that will depend on, you know, the price, obviously. Better prices will encourage more development in production and increase growth, and the export market that they've got with China at the moment is driving a lot of the growth in that space. So if that continues, you'd imagine that their production will keep rolling along. They have in the last couple of years, their production has increased, but it's been a little bit of a little bit like Australia. They're seeing more favourable seasonal conditions at the moment that have actually allowed them to produce more as well. There was a period where they were cattle prices were lower and seasonal conditions were worse, and obviously people were deciding they were going to hold on to their cows and not sell them. So we saw a lower production volume. So yeah, I think there will be more opportunities for Brazilian growth through a utilisation of the feed that they've got available rather than necessarily expanding into new areas.
All right, ladies and gentlemen, I'm going to have to draw it to a close, but Angus, you're around for a few hours today, or you're there tonight?
Unfortunately not tonight, but yeah, I'll be around for a couple of hours.
All right, so collar Angus at some stage before he leaves, but on behalf of the audience, thanks very much, Angus.
Thanks, Son.
Fantastic.
Thank you.